So with that, let's go ahead and get started. And the first thing we're going to do is what we'll cover today. And over the next half hour or so, first of all, I want to touch on 7 to-dos in preparation for the tax season. The reason why I want to start with that is understanding the PATH Act just falls under one of the 7 things you want to do in preparation before the season starts. Then we're going to talk about the PATH Act directly. We'll revisit the Affordable Care Act to make sure you're comfortable with that. And we'll finish up with additional industry changes of note. So with that, let's go ahead and start with 7 to-dos in preparation of the tax season. And why we start with this is number 1 is probably why you're on this call, or one of the reasons. You always, as a tax professional, want to make sure you're aware of what's changed or is changing in the industry. We've known for a long time the one thing about doing taxes and tax preparation is that no year is the exact same. And this is no different, of course, this year. And so one of the things you want to do is focus on making sure that you are apprised of all the changes that are out there. After all, your customers are looking to you as the subject matter expert on what's changed in the industry and what's changed as far as tax laws are concerned. Other to-dos before the season starts, make sure that you've implemented your communication strategies. And when we talk about your communication strategies, we're talking both within your company, if you have multiple sites, or even within one office, as well as your communication strategies to your clients externally. You want to make sure that you perfect your processes. You only get one shot at the beginning of tax season, and we know how busy it is. And if your processes are not clean, if they're not in place, and if they're not implemented properly, you put yourself in a position of disadvantage. We all know that when it's all said and done, we all make our money in a very short period of time, and perfecting your processes is one of the ways to ensure that you maximize on your earning potential. You'll want to make sure you staff appropriately. It's important to note that as you put your marketing strategies in place, it may impact who it is or how many people you need to go ahead and make sure that you can meet the demands of your client base. If you go ahead and you have a successful marketing campaign, but then you can't serve your customers that you've now brought into your business, you'll be in a position of disadvantage. And in fact, in many instances, you'll end up hurting your brand or hurting your company. So one of the things we always want to make sure you're doing as you're looking at what it is that I'm trying to do to grow my business, I am staffing appropriately. Very important to proactively prepare your clients. One of the things you realize is that if it's changed out there, we need to make sure that our clients know what's changed as well. And PATH Act is one of those things that you'll want to make sure you're preparing your customers for. And hand in hand with that is number 6. You need to think about how your clients will act or react. If there's going to be a delay in their abilities to get some of their money, that might have an impact on how it is that you'll work with them, because you'll want to make sure that you're providing different options to them that best serve their needs. And finally, number 7, before we get into the PATH Act and the Affordable Care Act and everything else we're going to cover today, the last to do is prepare your business for guests. Again, you only have one chance to make a first impression. And when you're talking about growing your business, when you're talking about opening your doors, when the time is now, and the time is now, one of the things you want to do is make sure that you are preparing your business for guests to come. So with that, those are the 7 to-dos, and we'll kind of revisit those at the end of this presentation as well. But let's go ahead and start implementing, or better yet, covering number 1. Know what's changed or is changing in the industry. And specifically, what we want to talk about is understanding the PATH Act. The PATH Act is really going to change what's going to happen to a lot of our early season filers. So with regard to that, let's understand what exactly the PATH Act is and what the potential ramifications of it are. First of all, the PATH Act, or Protecting Americans from Tax Hikes, was formally enacted back in 2015. However, for this tax season that we're dealing with right now, the following changes will occur in conjunction with the PATH Act. First of all, we need to understand that there'll be a delay in funding on returns that have earned income tax credit or additional child tax credits on it. Now that, right away, has a lot to do with early season filers right there, and that delay is serious. In fact, all held returns, anyone that has an EITC or an additional child tax credit, could be held all the way till the 15th of February, and that's just when they're going to begin being released. Please remember, they're not all going to be processed at that time. The releases will simply start at that time. Therefore, one of the things you'll need to do as a tax professional is make sure that you're still filing as you normally would have before. And why I say that is that if you wait until the 15th of February, or the 3rd week of February, the 2nd week of February, whatever that is, guess what? You're just going to be farther in arrears. You're going to be farther in the down the chain, if you will, and it's not going to be something that's going to be taken care of right away. So please, one of the things you want to do is still focus, and your customers are saying things along the lines of, well, what difference does it make if I'm not going to get funded until that time, or I'm not going to get a refund or potential refund until the latter part of February? Please make sure they know that it's still important to file in normal times. Now, the IRS has stated that refunds will likely not arrive in bank accounts all the way until the end of the month. They want to put themselves into a position where they're under-promising and over-delivering. So they're being very, very conservative in this estimate. There will not be funding taking place, or monies will not be in accounts all the way until literally the beginning of March. So you can understand how this is such a different year, where people are literally getting money put into accounts at the beginning of February. It's literally going to be 1 month after that. That's the expected time that funding will begin taking place into bank accounts. Now, what are some of the potential impacts of the PATH Act? I mean, gosh, we just laid this out, and you know what? That's oftentimes you can hear a needle drop when that becomes the case, because it is such a game changer. Well, let's take a look at some of these impacts. Well, first of all, the IRS is going to attempt to match W-2 information on all, and the operative word here is all, EITC returns this year. So they literally want to take this extra time and try to match things up. On top of that, if people contact or they go onto the website, where's my refund, anybody that's been impacted will suddenly now get a message that says refunds are not going to be available till after the 15th of February. Now, the IRS has stated that this hold will not impact a majority of taxpayers, although technically true. Let's be very straight up about this. It will impact a large number of early filers. So guess what? Anybody that's coming into your office now or during the next couple of weeks, we need to understand that it's going to impact a large percentage of those folks. Now, the impact of prepared due diligence requirements. This is really serious. Now, suddenly, the Form 8867 has been completely revised and renamed the Pay Preparers Due Diligence Checklist. What will be included? It will now include questions pertaining to the EITC, CTC, as well as the American Opportunities Tax Credit. In fact, questions 1 through 8 will pertain to all 3 credits. Please note that question 9 will be specific to the Earned Income Tax Credit. Question 10 pertains to the Child Tax Credit, and question 11 will be to the American Opportunities Tax Credit. So what does that look like? Please make sure that, right now we're going to flip over to the program just to see how this new form looks. So the focus of this checklist, by the way, is for proper questioning, correlating documentation and record retention, and whether the preparer explained particular items related to taking any one of these credits. So as we go ahead and we look at the program itself, one of the things you'll note is the 8867 is quite a bit different now. You'll notice that it has categories specifically for all of these different types of questions. And it'll be your responsibility to make sure that you're answering these questions. And it's not just that it's a viable claim, which we're going to talk about here in just a moment. It's actually that you've done your due diligence with regard to this as well. An important note, and this is what we were going to talk about just a moment ago, and I'm going to continue on with this train of thought. A preparer is subject to a penalty of $510 for any credit claim where insufficient due diligence has taken place. The operative statement here, again, is the insufficient due diligence. So even if it's a viable claim, if you have not done your due diligence as a preparer, you can still put yourself at risk as far as a penalty is concerned. And think about that for just a moment. This means that literally there's a potential $1,530 penalty on a single return where all 3 credits were claimed without proper due diligence taking place. So with regard to that, one of the things that we want to do is showcase another piece in the program for this upcoming year. We've gone ahead, and here's our checklist, but please note, because due diligence is so important, we've gone ahead, and if you go ahead to your setup and you go into your office setup, please note that when we get into the authorization audits, when it comes to things like earned income credit, we've actually expanded the questioning. So we have the questions that have always been in place, but what we've done in working with the IRS is gone ahead and added potential other questions or other things that due diligence is going to look for. Why I bring this up is, especially if you have new preparers in your office, I highly recommend that you consider making sure that they're checking for all of these things. So again, within your office setup, one of the things that you're going to go ahead and note is that there are more options available for you, so further due diligence questions can be asked and checked for. Now, regarding earned income tax credit, the IRS can bar an individual from claiming earned income tax credit for up to 10 years if that individual has been found to have fraudulently claimed an earned income tax credit. On top of that, individuals filing returns with earned income tax credit are now subject to the following. First of all, certainly a penalty for erroneous claims. And then on top of that, the claim will be considered when determining an underpayment penalty. So this is serious. And obviously, if they're holding the returns longer, they're going to be looking for these very things. Now, some further considerations when completing that 8867 we were just talking about. First of all, it must now include with returns that claim CTC and or AOTC. So in other words, in the past, of course, it was really put in place for the earned income tax credit. Now, if there's a claim for child tax credit or American Opportunities Tax Credit, in either instance, that 8867 also has to be completed. And please remember, question 12 pertains to any and all claims on the return, not just earned income tax credit. Now, all of these different credits, individuals can no longer file an amended return claiming any of these credits for years where a qualifying child or person didn't have a Social Security number or ITIN. So that, in a nutshell, is the PATH Act and what we have to consider with regard to that type of thing. On top of that, let's go ahead and take a look at some other things of note as we prepare for the tax season. The updates to the Affordable Care Act. Now, one of the things that we understand is that there's a new administration, new Congress, all that type of stuff, but right away we have to understand it has not been repealed or changed yet. Certainly we're hearing news about this type of thing, and it's going to take place down the road and what it's going to look like. But you know what? It is status quo right now. And Congress will need to pass legislation which will take place for next year to remove or change parts of the the Affordable Care Act. Therefore, the Affordable Care Act is in effect for the upcoming tax season. So guess what? As you're doing your returns, it's going to be exactly the same as last year. This is the third year in which you've had to go ahead and gather information from your taxpayers with regard to whether or not they had insurance. And this will be something that will still be in place for this upcoming year. As of 9/1/2016, the following exemptions can only be applied for on the return itself. So if you could have gone to the sites instead, the exchange sites, now it can only be through the return. Please remember that includes members of a health care sharing ministry, members of Indian tribes, as well as people that are incarcerated. Other updates to the Affordable Care Act. There is new rejection criteria. The IRS will reject silent returns, and that means any return in which there is not a positive entry on line 61. Let's go ahead and take a look at that for just a moment. It is imperative that you understand that there has to be an entry on line 61. So I'm going to go ahead and close this. If I go to the return itself, and I slide down to line 61, please note that on every return, you're going to either have to say that they had coverage or what it is, the calculations that you had with regard to how it is that they were either being reimbursed, with subsidies they had, whatever it might be. Line 61 will now have to have some kind of positive entry. And if you do not have an entry on line 61, please note that as you go through your verification in the program itself, it will err out. Other things to note, penalties for not having coverage without an exemption will increase. That was the plan all along. And so for this upcoming year, for people that don't have coverage, it'll be 2.5% of the total household adjusted gross income. But you know what? Where it was $325, I believe, before, or $395, it's now going to be $695 per adult and $347.50 per child, to a maximum now of $2,085 per household. So please note that this is an increase for people that are claiming to not have insurance and not be eligible for an exemption. Now, a couple things for review, and it's important to note these things. Certainly this is, you've been doing this before. Anybody that's new will need to know these things, but people that have already been filing returns in previous years will understand this. So this might be reviewed, but it's important to note there are essential forms that you need to be familiar with. Number one, of course, is the Form 1095-A. And that, of course, is received by the taxpayer from the marketplace or exchange, stating what it is that they received as far as the subsidy is concerned. There's 1095B, and that's if you're getting health care from a private insurer, and that's the statement of coverage. And then 1095C is a statement that you're going to receive from your employer should you be getting insurance. Now, we do note that 1095A, it's important, and we're going to cover this here in just a moment as well, but you know what, you're going to get this kind of information probably by the first part of February. However, a 1095B or 1095C, you might not receive, or in other words, your taxpayer may not receive and then bring it into your office until later on in the springtime. But that should not delay in any way you processing their tax return. That's for record purposes. We also have the Form 8962, and certainly the 1095A is used to calculate what the premium tax credit will be. And finally, Form 8965, this is the exemptions form. So if somebody doesn't have insurance, it means that there might be an opportunity for them to be exempt from coverage, and this is the form in which you'd be completing. And of course, in our program, what's nice about it is that you will be gathering the information from your customers right during the client data phase, right at the beginning, and with regard to that type of thing, should you be put into a position where they don't have coverage, there will be questionnaires which will take you through the process to make the calculations. Now, 1095A real quick, that is the formal statement known as the information return. That individuals who received, well, whenever that people receive whenever they receive health care through the marketplace itself. Now, that's either federal or state. And what will happen is they should be to you by the early part of February, or more specifically to your taxpayers by the early part of February 2017, to the 19 million people that have insurance through the exchanges. Now, the federal marketplace hopes to have those out by the end of the month, which would match, of course, with W-2s. So they need to be out by the end of the month as well. State marketplaces will try to have that information out by early February. If the taxpayer loses or does not receive his or her 1095A, it is important that in the federal, which most states are going to fall under, they'll make that 1095A available through the individual's account by way of a PDF. Okay, now there'll be something similar for the states, and again, most states today use the federal exchange, but please be aware, and I'm going to give you a list of the different states here in just a moment that still have their own exchanges. If you happen to be working or processing returns in states that have their own individual exchange, to note that so you can get so you can check if your tax-paying client doesn't have the 1095A and it's through one of those states where it is that they need to go to get that information. For those who receive a subsidy, in other words, the advanced premium tax credit, they must have access to that 1095A in Part 3, because that's what's going to be used to complete your Form 8962. Now, the last piece to this, of course, might be reviewed for many of you, but it is important to note that's the 8965. That is the health coverage exemptions. And so with regard to that, we always know that a vast majority of individuals without coverage will actually qualify for an exemption of some kind. And that individuals seeking exemption from the marketplace will need to complete Part 1 of that 8965 to indicate that an exemption was applied for and granted by the marketplace. And here's a couple of additional notes that are kind of important. An exemption certificate number is going to then be received, right? But that is going to actually be done by paper mail, snail mail, if you will. And so obviously there is going to be a delay. So it is okay to put pending as an acceptable entry in the ECN field when an exemption has been applied for from the marketplace but has not yet been received by the time you want to file that return. Additionally, with regard to the 8965, Part 2, check boxes for an exemption related to household income or gross income being below the filing threshold, and Part 3 is used to request an exemption that can be applied for when filing the return. Now, the penalty calculations worksheets are found on Form 8965 instructions. And a listing of exemptions and how individuals can apply for them can be found on the Affordable Care Act for Individuals page of our Tax Resource Center, located on our website. I want to go to that website right now because John made a great point about all the different places we give you folks information to help you out. Certainly, he's going to, again, talk about the social media aspect. But our own website itself has a lot of very, very valuable information that's available to you. And if you go to our website, crosslinktax.com, under the Customer Resources, you'll notice that there is a Tax Resource Center. Please make note of that Tax Resource Center and go ahead and take a look at it. So as an example, what we were talking about here is Healthcare Reform, Affordable Care Act for Individuals. You'll find all kinds of information, including that listing we were talking about of exemptions that people are eligible for. So again, within our site itself, our customer resources, crosslinktax.com, customer resources, your tax resource center is an excellent source for additional information. One of the things I promised just a couple of minutes ago, and I want to make sure I follow through on, is the fact that the marketplace itself, for most states, it's going to fall under the federal. And of course, that's healthcare.gov. But please note, if you're doing business in any of the states that are listed here, that they still have their own exchanges. Inasmuch, they will have their own different websites that you'll need to go to. So I'm going to hold this up here for just a moment. Make sure you folks can take note of that. Most of your states will be federal or under the federal exchange program. But if you do happen to be working in one of these states, make sure that you're noting what their marketplace websites are. You can even take note of their telephone number in case you need to contact them for further information. Now, a couple of other additional industry changes that are of note. It's important to understand that you always want to make sure what's the latest and greatest, what's changing before your customers come into your offices. First of all, stronger password requirements are required when accessing tax preparation software. You'll note that when you got your new CrossLink program for this year, and the reason why that is that's really something that's been mandated, and specifically for the case of making sure that people don't go into other folks' software to be looking at returns, which can then lead to things like fraud. On top of that, W-2 verification code pilot. And this is kind of an interesting thing. What's going to happen is unique 16 alphanumeric numbers on around 50 million 2016 W-2s are going to be issued. Now, there are 7 payroll providers that are taking part in this pilot. So that's one of the things you want to note is that there are specific providers of W-2s that are going to be doing this type of thing, but we're really looking for a large number, 50 million of these. So you may start seeing some W-2s that actually have this verification code in it. And it's used to validate the authenticity of the W-2. Now, issued W-2s will include copies B, that'll be to be filed with return, and C for the employee's records. It's very important to understand that with regard to this right here, if there is a verification code on that W-2, when you're completing the return in our software, there is an actual field for that. So let's go back into the program for just a moment. And we go into the program. If you notice, I go to a W-2, there it is. Box 9 is for that verification code. Now, if there is no verification code on that particular return, that's fine. You can go ahead and process it. But if there is a verification code on a W-2 that you receive, it is imperative that you put that information in here because the IRS is going to be checking for those things. And again, 7 payroll providers are taking part in this pilot, and out of those 7, they hope to provide 50 million W-2s this year with verification codes. Now, some dates to be aware of, and I'm sure you've probably already heard this, but I'm going to go ahead and make sure that it's truly confirmation. The April due date, in other words, when taxes are due. Well, with regard to that, it has changed. For this year alone, it will be the 18th, not the 15th, because that falls on a Saturday, or the 17th, which is a holiday in Washington, D.C. So instead, it's been pushed to the 18th of April with regard to federal returns. The start of the filing season, this is even more important for all of you folks to note. Remember, we're going to be in a position where the IRS is going to be holding returns until the 15th of February. Funding's not going to take place till the end of February. Well, guess what? The filing season itself was actually pushed back a bit as well. They will not be taking forms. They will not be taking returns until the 23rd of January. Now, another thing of note is expiration of ITINs. And some of you folks do work with folks with ITINs. Please note that all ITINs issued before 2013 will expire over the next 4 years. What's even more important as you're reading through these notes right here is that understand that middle digits of 78 or 79 and that have not been used for the past 3 consecutive years will expire at the end of this year. So these are going to be getting turned over. Process on how to renew is in revised W-7 instructions and in the IRS Notice 2016-48. Individuals with applicable middle digits received IRS letters, the IRS letter 5821. So they were made known, this was made known to them. Now to renew, you'll need to use the newly revised Form W-7, which came out in September of 2016, that now contains a checkbox for renewal. So that if somebody's applying for a new one, or if somebody wants to renew, in either instance, they're going to be using the exact same form. Regarding states, a couple of additional pieces of information that are important. Most states will not be providing timelines for when their taxpayers can expect a state refund. They don't want to put themselves into a position where all of a sudden they are over-promising and under-delivering. So it is worth monitoring for the specific states in which you're working in. If there is a state refund that's involved with that type of thing, please take note of your state taxes offices and see whether or not there's information being provided as to when people can expect that type of thing, even if it's what the turnaround time is, 2 weeks, 3 weeks, 4 weeks, whatever it might be. It is important that you as the tax professional are monitoring that type of stuff. States will continue asking for driver's license state IDs in an effort to combat fraud. So that is a very, very important piece of information. When you are doing a return for someone, let's go back into the tax software for just a moment here. If we go up into the client data, you'll notice down at the bottom, it does ask in the individual's information, it does ask for information with regard to driver's license or state-issued IDs. This is specifically for those state returns. If your customer chooses not to provide that type of information, it is in your best interest to inform them that this could cause a red flag, and the state might delay funding or want to look at that return at greater length. So please note that when people are in your offices, and of course if they're going with a financial product, they'll be providing this information anyway, but if not, it's still important to understand why it is that they need to provide this information. The states are always looking for that as a weapon to help them combat fraud. Reminder also that only 3 direct deposits to one account will be allowed by the IRS. So when it comes to the IRS, if you have gone ahead and you are filing with a specific account that something's supposed to be deposited, and so there's a significant other or whomever else might be, it is understood that if it's beyond 3, that there is suddenly going to be a flag issued by the IRS. And what's going to happen is any additional direct deposit request will result in a check being mailed to the taxpayer at the address on the return. Normal turnaround times are going to apply, so they were talking more like 4 to 6 weeks on something like that. Now, remember, the IRS doesn't understand who might be the primary and who might be secondary on that particular account, so they're going to do it in the order in which they've received. So if you're now going ahead and ask for something to be deposited into your account, but you have family members that have done the same exact thing, you'll have to know, or your customers have family members that have done that type of thing. If it's past the 3rd one, the IRS is going to be issuing a check instead. Now, the last thing that I kind of want to show you folks before we open it up for some questions is that the IRS does provide a lot of very valuable information. And so here's some helpful IRS pages. Now, I'm not asking that you go ahead and write every one of these things down longhand or anything like that, but take note of the title, Sharing Economy Reference Center, or Protect Your Clients, Protect Yourself. All of these different websites, you can go ahead and do searches, do a Google search, whatever it might be, and you can find these things. And guess what? In many instances, this will be of great value as you prepare for the season, and also great resource or reference material should there be something that comes up during the season. On top of that, please note that within our program itself, we also have bulletins that we issue out, and I already showed you the Tax Resource Center that's available through CrossLinkTax.com. So in closing, I do want to go back to what we talked about right up front. And that is to remember the 7 to-dos before the season starts. And before I turn this back over to John, please remember, know what's changed or is changing, which is what we were talking about specifically today. Make sure you implement your communication strategies, perfect your processes, and staff appropriately. Proactively prepare for your clients and always try to think how they're going to act or react to changes that are out there. And finally, and very importantly, you know what? Prepare your business for guests. You have one chance to make a first impression, and guess what? It's coming very shortly at the end of this month when people are going to be in your offices, if they haven't already come into your offices, wanting your help, and you'll want to make sure that you put your best foot forward.